Well, I think we're about ready to go. I'm Lawrence Gassman. I'm president of SmarTech Analysis, president and founder, I suppose. Also involved in putting together this spectacular day-long seminar is our other sister company, 3dprint.com, which is the most recognized website, news website in 3D print, and Stifel, who've been active in a great number of acquisitions and mergers, which are becoming more and more common, it seems. It seems ne'er a day goes by without something happening in the M&A business. And that said, you're not here to hear me. We have one of the most spectacular executive summits that have been put together, I think ever, actually. I'm looking at my list of speakers right now, and CEO, Executive Vice President. I think we're going to hear some very important statements made today, both in the first half that I'm chairing and in the second half after lunch. I would mention one other organizing entity, if you like. 3dprint.com and SmarTech put on our own show in March, actually the beginning of March next year. And that's Additive Manufacturing Strategies. And I'd urge you all to know more about that and come. It'll be a, literally, you'll be able to come because it will be a hybrid event. When we get to Stephen, I'll let him talk about Stifel more than I have because he knows more about Stifel than I do. But obviously, they've been very active in arranging deals of very many kinds in the recent past, and they're our partner in the show. So I want to make sure that you all know who everyone is, and I think probably the best way is if they introduce themselves. And I'm going to ask to go around, I'll call out their names, and they'll spend a minute or so saying who they are, saying what their company is, what it does roughly, and maybe it's saying what they expect to see, what key trends they expect to see in the next, pick a time frame, year to 5 years that are important from a business and financial perspective. And then we'll go to questions for the individual panelists, and I'll be sharing that function with Vanessa, who's one of the leading, actually these days she's both a journalist and an analyst. She crosses our lines and does well at both. So I've got a list of people and I'm going to go down it, and I apologize if anybody thinks they should be a different place in the list. Our panel is so distinguished that it's hard to make a list. But let's start with Benny. Just say a little bit about your company and what you think are key trends that we're going to see in the next few. And again, I ask everyone to brief, probably not just on this question, but the questions too, because it seems like we've got a little time, but we don't really. And I've done this kind of thing before, and for me, how fast I go. So Benny, if I could
Sure.
Send it over to you.
Thank you. So my name is Benny Buller, and I'm the CEO and founder of Velo3D. Velo3D is making industrial additive manufacturing with metal for high-value applications, for high-value parts. And the trend that we can see in the industry today, and again, I'm speaking about metal, 3D printing, metal additive manufacturing, is the emergence and the continuous emergence of the use of additive manufacturing for production of high-value parts that are going into actual products and shipped to customers as opposed to prototyping. We also see, as part of that, the emergence of a supply chain, because we see more and more customers OEMs preferring to buy parts as opposed to invest in building their own additive manufacturing infrastructure for production. So the emergence of production is a big trend, and the emergence of strong supply chains to facilitate this production.
Thank you. Let's go to Arno Held now from AM Ventures.
Yeah, thank you very much, and good morning and good afternoon to Europe. My name is Arno Held. I'm managing partner of AM Ventures. I've been in industrial 3D printing for 13 years, 7 years of them with EOS in Munich, and in January 2015. We, as a team of 2 and funded by the Langer family, we started AM Ventures with the aim of focused investments in early stage startups in industrial 3D printing. Today, we're a team of about 10 people. We have 15 investments in 6 countries on 3 continents. We are monitoring startups and tracking them all over the world. Our database currently has about 2,500 startups, and that brings me to the trends and to the observation in the industry, because it's incredibly encouraging. We scouted about 200 startups in 2019, 220 in 2020. And just this year alone, already in July, we exceeded 500 startups scouted in the industrial 3D printing space. And the most encouraging thing, after the field of startups was very heavily dominated by hardware concepts in the widest sense, this year, half of the startups that we scouted are application-based startups. So this is a very encouraging sign that now industrial 3D printing has become a very viable manufacturing technology, and people are starting to realize what you can do with this technology, which is printing great parts of very, very high value. So I think we have a pretty nice future ahead of us.
Thank you. Let's go to Jürgen from Ultimaker. I'm sorry.
That's correct.
I thought I must have put that. Oh, yeah, okay, good. Please tell us about yourself and how you see the trends.
Yeah, my name is Jürgen von Hollen. I've been the CEO of Ultimaker since the beginning of this year. Ultimaker is really a company focused on the professional desktop 3D printing market. It's, we're based in Utrecht in the Netherlands. And I think from a company perspective, we're very strong on the hardware, the platform side, but also on the software side, which is kind of following up with Arno. I think that for me is a kind of a unique thing. We're very much focused on offering an ecosystem, open model, to allow the most flexibility. And that's kind of where I see the trend going, because one of the things we see is that, or at least I see, is that the amount of volatility in the markets, whether it's political, economic, pandemic, is not going to decrease over time. So the way I see it is that 3D printing is an enabling technology for flexibility. And I think that's an opportunity for us as an industry to really empower companies out there to become way more, quicker, flexible, dynamic to deal with that. Thank you.
Great. Now let's move to Jeffrey and get a different perspective.
Thanks, Lawrence. It's a pleasure to be with you and the other panelists this morning. So I'm Jeff Graves. I'm the CEO of 3D Systems. Most of you have some background with 3D Systems. We were one of the pioneers in the industry and are one of the largest participants today. We went through a major reorganization a year ago to be very market and vertical focused across healthcare and industrial, and bring together basically the 3 technologies that we have under roof. So it's printers, materials, and software, really focused on delivering application solutions to customers. We try to pick those applications very carefully so that they're market leading applications that'll pull additive manufacturing even faster into production environments. Our focus is on production additive manufacturing today. It's I think we're coming into a lovely phase in the world where additive solves a lot of problems for a lot of people, and it's a question of how rapidly can they bring the technology in-house. Our customers bring it in-house and incorporate it within their own ecosystems to take advantage of it. We do offer the full spectrum of polymer and metal printing solutions. Many of our customers want both technologies and they want the best of both. So we support them, and we see other manufacturers supporting them as well. So we're very focused on what are the barriers to making progress right now with additive in production environments. We think it has a great future, and I think all the participants on this panel agree it's a very exciting time for the entire industry.
That's great. Thank you so much. Let's move to Stephen from Stifel.
Great. Thanks, Lawrence.
I guess.
Yeah. So no, thank you, 3dprint.com and SmarTech for being partners here for this event. I'm with Stifel. Stifel is a global financial services firm that has two divisions: investment banking and wealth management. I sit in the investment bank. We have operations in the U.S., Europe, and Israel, as well as in Asia. I'm a managing director in our technology group, which has about 100 managing directors, or 100 bankers, excuse me, based principally in the U.S., New York, and Silicon Valley, as well as in London and in Israel. I co-head our industrial technology calling efforts, which really additive manufacturing, digital manufacturing is a big focus of ours. We've done or announced in excess of 10 transactions in 2021 alone, covering the broad, the full range of products, M&A, buy side, sell side, capital raising, follow-ons, as well as in SPAC merger type transactions. I'm happy to say that a lot of the faces on that I see here on the panel with me on this panel, as well as the panel in the afternoon, we either helped them with what they were trying to accomplish, or we sat across the table from them on certain situations, and we have great dialogue with all of them. As far as the industry is concerned, I've been covering the industry for about a decade. It's a really dynamic industry. I very much see it taking root and getting a lot of focus. A lot of new leadership coming into the industry, and they're applying some of that focus. And as such, I think you're seeing a great acceleration, and you should see an acceleration, really for the foreseeable future, as these technologies complement traditional manufacturing and are really earning their place on the shop floor and helping companies, really bring product to market or ultimately produce their final product. So we are happy to be part of this journey and look forward to participating for the duration.
Thank you. Fascinating answers to the question. Makes me quite excited about the future of, well, my own company, but also the whole industry going in new directions. How about next panelist is Ryan from Fathom. Could we get your background and opinions on where we're headed?
Yeah, great. But first of all, I appreciate the opportunity to be here. Thank you to SmarTech, 3dprint.com, and Stifel for putting on this event. I know this doesn't happen by accident, and it's great to be part of such a distinguished panel here today. My name is Ryan Martin. I'm the CEO of Fathom Manufacturing. We've built Fathom Manufacturing into the leading on-demand digital manufacturing platform that really focuses on the complex manufacturing needs of the corporate customers, focusing on product development and low and mid-volume manufacturing. We've built a platform with 12 manufacturing facilities across the country, 25 different manufacturing processes. We work with many of the other folks that are on this call, and we help accelerate product innovation for the most product-driven companies in the world. And so as you think about the macro trends that are going on in the market today, there isn't a CEO that I talk to that isn't dealing with supply chain disruption. I have many examples that I can give just recently where we've seen significant supply chain line down situations where 3D printing has been able to help get them parts within 24 hours and keep a line running and save them millions of dollars. And so the macro trends around supply chain disruption, more agile supply chains, more localization, I think is a macro trend that we've built the Fathom platform for, but this broad set of companies that's part of this platform is going to benefit from. I think more product customization is coming, which these technologies lend themselves to, as well as the continued digitization of manufacturing, which you see some of the investments that the other folks on this panel have made and that we've made on our side of things continue to lead into that. And so And then the last macro trend that I think that's going to play out in the market that's going to benefit this entire panel is just new product development acceleration. Our companies that we work with are having to bring more products to market faster than ever before. They're having to innovate and bring new products to market. And to do that, they have to rethink their supply chain. They have to rethink the manufacturing processes and the technologies. And I think as you look at this panel of folks that are here today, we have the technology and the expertise to be able to help these corporate customers be able to rethink the way they bring products to market. And so those are the macro trends that I certainly see playing out. And we've built our platform, to really focus on those things.
The supply chain thing certainly resonates with me. About 2 weeks ago, I bought a car. I bought many cars in my life. That turns out to be quite a difficult thing to do now. It was just a Toyota, and I actually got it within a week, but that was more coincidence. People are waiting weeks now for little Toyotas. So if you can find a way to print automotive chips, I think there's a big cash flow there. So.
Yeah, well, we work with many of the companies that are in the semiconductor industry that are making the chips and helping put the parts that are going into the machines that are making those. And so there's it's a whole supply chain challenge related to that.
No kidding. Yeah. Last but definitely not least is my colleague Scott Dunham. I've had the privilege of working with him for, Scott can contradict me, but I think it's about 6 or 7 years now. He's the EVP and basically our chief forecaster. So Scott, can you say who you are beyond what I've already said, and talk about how you see the trends, because you're coming from a slightly different position.
Happy to, yeah. Good morning and good afternoon, everybody. I'm definitely the least important person on this panel, so it's an honor to be here amongst you all, and thanks for all the attendees for tuning in. I am the Executive Vice President of Research at SmarTech, and that's a role that I've been in some form or another for, I think, Lawrence, probably about 6 years now, and there were a couple years before that I was also involved in similar consulting and analysis for the additive manufacturing industry. So that brings my experience up to about 8 years or so, looking at the industry from a market analyst perspective full time for about the last 8 years. So a different perspective than some of the others on the panel here. And really what I think, what we're looking at now is, obviously a really interesting scenario in the short term. From the market analyst perspective, I think that we're going to see a lot more a continuation of a trend that's already ongoing, which is a strong push for diversification of offering from the community of companies supplying the solutions out there, whether it's through acquisition, bringing new print technologies under an existing brand, or something to that effect, similar to what we've seen with some of the acquisitions of Desktop Metal, and just a lot of diversification, say from Stratasys on their product offering. I think that years ago we talked about how the golden rule of 3D printing was there was no one process to serve all applications, and of course that was years ago. I think we were thinking a little too far ahead in the future at that point. And now it's interesting that the hardware has definitely come a long way, and that's opened up a lot of opportunities for other things that we're seeing play out now. And the longer term, I think we're going to see the outlook is very positive, and it's based around a pretty aggressive growth scenario. And I think we'll see a lot of focus again, as Arno mentioned, focus now on the application development, and that's being made possible through a lot of the technical developments that companies on this panel have made happen with the hardware to allow a wider range of real industrial materials and product process robustness and all those things that will enable that boom in applications. It's kind of ironic that now the driving force for at least for the short term for 3D printing is actually the flexibility and the quick turn capabilities, and not so much pure volume production and cost per part, because of the scenario that a lot of industries are in right now. So that's a benefit that has always been there with 3D printing, but the industry now happens to be in a much more capable spot of serving a lot more applications now. And so I think that we're all going to benefit from that.
Well, thanks, Scott. And don't say you're the least important person. I don't know how you rank these things, but you probably have served as an industry analyst longer than anybody else in the world. You know, there were some people who came in and left, and people who have hands-on type of thing, but as a forecaster, I think you're unique. Well, that's the initial phase of this day. I'm going to hand over to Vanessa now, who's going to start asking our panelists individual questions. So Vanessa's out there somewhere. I'm handing over to you.
Hi, everybody. So here's a question for Benny. After announcing that Velo3D was going public, you also anticipated very high revenues for the upcoming years. How do you plan to keep up this growth?
Sorry about this. As we communicated, we are growing from about $20 million revenue last year to almost $100 million next year. Very significant portion of this revenue is already through bookings and pre-orders for systems that we will ship next year. We have also a fundamental pattern that all our customers that we are selling to our manufacturing customers, that they are actually not buying one system, they are buying fleets. The first system that they are buying is a validation system on their way to buy many more. So we see a very strong pattern of customers buying more and more systems. And we have seen that in H1 of our last years, and this will continue to accelerate next year. So fundamentally, the way we built our model and the way we're building our strategy, we have tripled our customer base in each one of the last few years. We are tripling our customer base this year as well. Each one of those customers is buying more and more systems every year. Then as we added the scale-up system, the Sapphire XC, to our portfolio systems, and this has increased demand even further, fulfilling our plan for next year with very high certainty.
Jürgen, I'm looking at two questions I can possibly ask you, and they're both fascinating, but I've chosen one. We're very interested in how software in what's being sold by the industry. In a way, it's no surprise. It's kind of what happened in the computer industry too, in its various phases. And other people have mentioned it already. Is this a trend you see as continuing, and will things be packaged together? I mean, how does this change the value chain and the supply chain?
Yeah, it's a good question, right? So I think from my perspective, working in many other different industries, you'll see the same trend. And I think one of the things we've heard from one of the panelists here today already is that moving towards applications, moving towards the customer's perspective of that integrated workflow that they see, and offering that integrated workflow that is the ease of use is so important. I think, coming into the industry, I think we have overcomplicated many things by driving technology first and solutions second. And I think we now are seeing that we're on the cusp of moving towards solutions from a customer perspective that truly fit into their work environments. And I think that's going to be one of the key drivers for us, is to be able to, get that, ease of use, but it's also the first time right, because I think it's very important that we allow the customer to have success with what they're doing. And I believe that's only possible when you move towards this kind of application specificity. And I think that's something where there's a huge opportunity. And at the same time, from our perspective, looking at the professional desktop environment, still offering flexibility, because there's still a lot of, things that are happening quickly. And we just talked about supply chain disruptions, giving customers that empowerment to change their production line quickly, to develop new applications is absolutely key from my perspective. So I do think, ease of use, integrated solutions is the way we have to go. And I do think, and maybe this is one aspect coming completely from an outside view, is the complexity within 3D printing is very high. And for me, that's actually makes me happy, because I think we have an opportunity to simplify things for customers. So complexity equals a good thing if we can actually get those applications and solutions done to what the customers actually need. So that would be my quick take on that question.
So, I mean, complexity can be quite profitable if you know how to use it as well. So anybody else on the panel have any comments on that question?
I would offer, Lawrence, that I would echo what Jürgen just said on certainly from a production standpoint. The printing systems historically have been very complicated. They've had to be run by experts. As it moves into a production environment, things have to be simpler. They have to be well integrated with the manufacturing workflow. It's a compliment to everybody that's advanced the technology that we can make good parts now, and we can make them out of useful engineering materials. The next challenge is how do you make them, how do you make it a true production process with good managed workflow, good economics, good throughput, good yields, and not have it be able to, not have it be needed to be run by a PhD in mechanical engineering. So that's the challenge we face right now as an industry. And the level of innovation in all the technology aspects is lovely. And I think the move to cloud-based AI platforms to optimize not only the print process, but the whole workflow is marvelous.
It's great to hear. Anybody else have a comment?
Yeah, the other thing that I would add to that, Lawrence, on the service side of things, Fathom's on the service manufacturing side of things, and we leverage all these different technologies. And what our corporate customers are they're looking to achieve an outcome. They're coming to us with a challenge, typically a manufacturing challenge, and they're looking to leverage all the different tools out there. And so I think it's that outcome-based approach to be able to solve their problems, and it's really the convergence between 3D printing or additive manufacturing and traditional manufacturing, and being able to leverage all the different technologies that are out there, ultimately to give them the outcome they're looking to achieve. And as we talked about before, one of the complex challenges that a lot of these executives are facing right now is supply chain disruption. And so they're looking at these different technologies of how they can adopt those or bring those in either in-house or leverage service providers to be able to use those to solve their challenges. And one of the big challenges that they're trying to solve for right now is exactly supply chain disruption, where the 3D printing technology lends itself to be able to do that very, very quickly.
That's interesting to hear. Anybody else? All right, then I'm going to move to Vanessa. And next question.
Great. I was hoping to ask Arno about venture capital, and we're seeing the venture capital scene for 3D printing companies thrive. So what do you think this is? Is this better than 5 or 10 years ago? How has it improved?
Yes, certainly much better than 5 years ago or so when we started the company. It was very hard for hardware startups, especially in additive manufacturing, to get funds from other investors because they hardly knew anything about the technology. And it took some time for also investors to get the first toe in the water and find out how the technology works and what the technology can be used for. Because in the last couple of years, there was always what we say, great technology looking for an application, and we saw some interesting high potential applications in early phase development, but it really took some time for a couple of breakthroughs to happen to see that additive manufacturing can be used for large scale manufacturing. And today we see, let's say, dental aligners, for example, heat exchangers, some interesting progress on electric motors or hydraulic valves, what we just saw this morning happening. So the first couple of years, or the last couple of years, what started was a very highly fragmented landscape of very small kind of islands and different software modules. And I think what we're seeing right now is the entire market ordering itself, getting a certain structure, and this is what's triggering the whole consolidation, and what is creating the dynamic that we're seeing right now. And we're just on the start of this, actually. And many investors who have been very active in software in the past decades are now finding some interest also in entering or moving from platform and consumer-faced kind of approaches into industrial tech, and more specifically into hardware technology, because this dynamic of a highly fragmented, chaotic industry market is now forming and putting itself into shape is very appealing for an investor.
And any global hotspots for AM companies?
Oh, yes. Well, from when we look at our global tech radar, there's, I would say, maybe 5 very big hotspots around the planet where startups are originating from primarily. In the US, of course, you have, let's say, Valley, Boston area, and Austin as the birthplace of 3D printing. And when we look at Europe, from our perspective, there's a pretty interesting axis in Western Europe, which spans from Karlsruhe or Stuttgart in Western Germany to Vienna in Austria and Munich in the middle. And of course, it all comes from very strong technical universities. And you can name, of course, Technical University of Munich, Technical University of Vienna as some of the big innovation drivers, ETH Zurich. Of course, also needs to be mentioned within this corridor here in Western Europe, or in the German-speaking part of Europe, which I would consider also as part of the 5 or 6 global hotspots of innovation for additive manufacturing.
Great. Stephen, would you like to say anything about VC capital?
Yeah, sure. I mean, I think obviously the VC in the additive manufacturing, has a long history. A lot of unicorns that have ultimately either are at their late stage or have gone public. But what's been really interesting, I think, over the last 3 to 5 years is how the VCs have really focused on the services industry, and specifically what we call at Stifel the digital manufacturers. So be it either marketplaces, or largely because really these are businesses that are driven and enabled by software. And software really, from every see of workflow, which ultimately enables these businesses to put out tremendous amount of capacity. Capacity utilization is really where I think investors focus to see where they're going to get a return on their investment. And so it's great to see, continued investment in hardware and materials. There has been investment in software, few and far between that have ever really hit scale. But the other area, as I would put out, is, and where we're still seeing continued investment, is the services business, which are largely software driven.
Anybody else? Otherwise,
Lawrence, can I add something to this?
oh, of course.
I think one of the things that has been lacking, if you look at 3D printing 10 years ago, is an ecosystem of buyers. So you had 3D Systems and Stratasys 10 years ago as the 2 potential buyers for exits of startup companies. And what you see in the last 2 years is the emergence of a group of public companies that provides exit opportunities for new startups coming to the scene, which was really critical and was really missing when it comes to VC investments in the space. Either you had to make it as a big company, public company, or you didn't have an exit option, or very limited exit options. So I think this will also help fuel investments in the space.
Well, one of the other questions that popped up was actually how the VC, I throw in investment bank into the question, scene within 3D printing has changed in the last 5 years. And I think you partially answered that question, but just as an observer, it's certainly become much more sophisticated. And, the way today is a testament to that. So I think that's very interesting. Anybody else want to comment on that last question?
The only thing I'd add to that is, Lawrence, is that, it's fair to say that there is a robust community based both in the US and Western Europe, less so Asia, in VC, both from a financial perspective, but what's also very active in this sector and stands out is the level of corporate VC that is also involved here as major providers of capital, or have been major providers of capital and validation of the businesses and the technologies within the sector, which is also kind of interesting.
Yeah.
Yeah. And the other thing that I would add to that, Lawrence, that also has seen an acceleration here in the last couple of years is private equity and private equity's place in 3D printing as well. It's been a very historically, the fragmented industry, especially on the service provider side of things. And private equity has certainly made a lot of investments in that space. And we're, Fathom is one of those companies that we've built and have taken a lot of the fragmentation in this industry and built a platform around that. And so I think that's an area that you're going to continue to see investment in there as well from an exit strategy standpoint for some of these companies out there. I think that's another trend that I think will continue to accelerate over the next couple of years.
Yeah, that's very interesting. I'm sorry, I've stolen your thunder, Vanessa, but maybe we should move on to the next question. I went to look at the questions that are coming from the audience, and there was one for Jeffrey from 3D Systems that I thought was particularly interesting. You other gentlemen might have some comments on it, so I'll read it. Jeffrey, how does 3D Systems reconcile selling machines to clients, OEMs and CMOs, and also provide services that also compete with your service clients? How do you reconcile all that? I mean, both from, well, I guess, particularly from an internal accounting, internal profitability standpoint.
No, very, very valid question, Lawrence. And that's when I came in as CEO a year ago, that was one of the first questions that I needed to deal with. And quite frankly, it's led us to divest our service business. I think the service industry is a great industry. There's a real need for quick turn part manufacturing for a variety of reasons that have been mentioned by the panelists on this call. There's a real need for that. The metrics are very clear. It's how fast can you make high quality parts out of both metal and polymer. There's going to be an ongoing demand and a rising demand for that. The problem with that from our standpoint at 3D Systems was it's a different set of metrics than what we viewed as really core. And that's providing application specific technologies to folks that wanted to take in additive manufacturing or start additive manufacturing on a production scale. In that sense, we were driven toward being very application specific, helping a customer bring the technology in-house, demonstrate the economics. So for me, it was a strategic question, and we chose to exit the service business. And I would tell you, kind of late breaking news, we just closed that exit about an hour ago. So we're out of the service business. The ODM business is gone, and that cash is on our balance sheet as well. So we've been going through that process. We announced it, several months ago, but it closed this morning. It was an inherent conflict within the company, and we needed to resolve it. That service bureau business now is a very big market for us to serve and support. So we're no longer conflicted. We're supporting that.
I'm the guy who does the services, the metal services report every year, and that sort of hovers over me. I don't think we've ever commented on it particularly, but it gets a little incestuous. Scott, I'll be actually interested to hear what you say about it. I know I write the report, but you must have a perspective on it when you're doing all the breakouts and things in our huge database of forecasts.
Yeah, I mean, well, just with regard to the service the kind of the services, AM services market in general. I think that it's so interesting how the contextual scenario that many markets find themselves in the last year, has now kind of radically changed everything. So when you look at like, in 2019, for example, largely before, a lot of the supply chain disruption, the 3D printing or the additive manufacturing industry, as far as a technical standpoint and the capabilities and everything isn't hugely different today than it was in 2019, but there wasn't, the appetite for investment, the growth projections, even just the interest levels from a lot of industries were much different then than they are now. They're much elevated now. And Ryan has made comments, a couple times this morning about, the supply chain disruption is kind of what, he sees driving a lot of the interest and a lot of the growth. And I, would agree with that, at least based on our research. And what has changed largely, a lot of things have changed, but what mostly has changed is simply the kind of contextual scenario that companies and manufacturers find themselves in now. And it's like now they're much more incentivized to get involved with 3D printing than they were before. Whereas, it's kind of like if there's not enough pain in the in your business, then kind of why change? You can kind of continue along how things have always been done. And now that that proposition has largely changed, things, if left to normal, would be very painful for a lot of manufacturers out there. Now they're incentivized to lean on 3D printing, and the service bureau market is those companies that have those service providers that have a real offering for production and end use parts and application specific support and all those things. A lot of stuff that Fathom is involved in, some of the others, they're going to be the ones that benefit a lot. And I actually think that kind of that fragmented service bureau market where there's historically a lot of independent kind of small operating bureaus, I think those are going to, especially on the metal side, those are going to disappear very fast. They're going to become rolled up into, if they have a strong offering and some mastery of the process and some good equipment and smart people working for them, they're going to get rolled up very quickly into bigger businesses, maybe other service providers, maybe investment companies and other companies in the space that want to get into that side of things. So I think we'll see that in the next couple of years play out.
So let me ask you one more question, because we got this question from the audience, and it's highly relevant to what you just said, Scott. What the person actually kind of asked was, is this a good time to start a service business? And based on what you just said, I guess the answer is no, or perhaps yes if you're specialized.
Well, I mean, I don't know if this is a great time specifically to start, because it's, it takes, it's not something that can happen overnight. The service businesses that are going to thrive now are those that have, been very intentional about setting up, platforms and targeting specific applications and specific user groups, and kind of, getting in deep with those customers. And now those customers, if they have the supply chain issues, it's a very, easy pivot to a partner like that. So, I don't think there's any time, it's kind of like there's no time like the present. It's still a good time from that perspective, but, don't expect, a quick turn profit on a new, service operation right now, unless you just have a ton of capital to get things moving relatively quickly. But, certainly we see the services business as here to stay, as, long-term is going to be a core of the industry. And so, from that perspective, the longer term perspective, sure, then today is a great time to get into this business.
I hope it's going to be around, otherwise I don't get to write my report next year. But, let me hand back to Vanessa.
Right. So since Scott mentioned service companies, what would Ryan Martin say about the convergence of additive and traditional manufacturing to provide this unique hybridized solutions for complex manufacturing challenges? So what are Fathom's views about this?
Yeah, so what's really unique about Fathom is we're one of the earliest adopters of both plastic and metal additive manufacturing in North America. So we have a deep history of that. And additive manufacturing, let me give you two examples. We've talked a lot about supply chain disruption, and you talk about those relationships with these corporate customers. So, just recently, last week, I got a call from an executive at one of the largest agricultural equipment manufacturers. They called us at 10 a.m. in the morning on a Tuesday. They knew they had a line down situation at 3 a.m. the next day for a $1 injection molded part that they literally could not source because of a material shortage. And this part was a connector for their hood to go onto a lawnmower. And so a very simple part. We 3D printed that part. They chartered a plane up to our facility, brought those parts on. They went straight from our 3D printing into their manufacturing line. And so that's one example of 3D printing. Another example, when you think about the convergence of 3D printing and traditional manufacturing, we had another large corporate customer of ours, one of the largest outdoor vehicle recreation manufacturers, talking to an executive there. They couldn't get a $10 cast aluminum part that went into over 1,000 of their vehicles. They have over 82% of their orders are backlog right now. So the faster that they can make stuff, they can sell it. And so they had $20 million of revenue risk in Q2 because of a $10 cast aluminum part. We were able to look, in this case, we redesigned the way that this part was manufactured. We were able to keep the functionality. In this case, it made sense to use CNC machining. So you think about the convergence of 3D printing and more traditional manufacturing. And that's, on the service side of things, it's really having that, as we talked about, that outcome-based approach. Sometimes certain applications, 3D printing makes complete sense. Other times it's a mix of the two. So in this case, we actually 3D printed tooling and fixtures, and then we CNC manufacture that part. Because of our capability to leverage all these different technologies, in this case, for the outdoor recreational vehicle, we were able to produce 2,000 of these parts. They needed 2 on each vehicle. They were able to sell 1,000 of these vehicles, which enabled them to have over $20 million of revenue that they were going to miss through their traditional supply chain. And so that's just the convergence of really being outcome focused, having a large set of manufacturing capabilities and understanding what's the customer looking to achieve, and then provide that unique solution that's leveraging all the different technologies. And that's the value that, from a service side of things, the Fathom brings to the customer. And then the value, as you think about, what Jeff's doing and what Benny's doing, those are the technologies that ultimately Fathom will leverage to be able to solve these problems for the customers.
Ryan, I think you summarized that extremely well. And that's the difference between a service bureau, a service organization like your own, which there's an enormous need for and growing, versus those of us that provide the printing technology. So I think you summarized it quite nicely. I think both are very good industries, very good businesses that'll continue to grow very quickly over time.
Mm-hmm. Jeff, I'll add on to that. As you see it from an investment perspective, we are very much seeing what we call two universes of investment, and that's the digital manufacturers. So the way I would say it's a service provider, and then the technology providers. And I think, in 3 to 5 years, you're going to see, more than a handful of companies in each, and they're going to have distinct, valuation attributes and fundraising attributes. That being said, I think they're they need each other to exist.
Mm-hmm.
It's a hand in glove.
Absolutely.
Yep.
Absolutely, Stephen. Well said. I completely agree with you. And both are very good industries. They just have their own operating metrics and potentially their own investor bases.
Yep.
It's funny. I began my career many years ago in graphics printing, just good old fashioned analog stuff. And we printed jigsaw puzzles, and we printed greetings cards with people like Hallmark. Thinking back to it, it's a family business, so I was involved in business decisions. And I don't think we ever thought about making our printing machines. That, they really are very different. And while 3D printing is very different from what I experienced, it's not that different structurally. And it's just odd. I guess it's just a historical oddity, and we'll pull ourselves out of it. So that's very interesting.
And I think Lawrence, to that point that you and Stephen just made, I think companies all will face that decision. Which group are they in, and which do they want to be the best in, from a competition standpoint? And that's that distinction starting to happen, and I think it'll continue to evolve.
Yeah. Yeah, the way that we think about it is we're technology agnostic. Our customers come to us with their complex manufacturing challenge, and we look to provide the best outcome for them. And then we want to have a really close relationship with all the technology OEMs that are developing the next level of technology. And because of the relationships that we have with the customers, we understand where they see that technology going, and then we're going to continue to adopt the technology that makes the most sense to solve the manufacturing challenges of the corporate customers that we're working with. And so it's really a hand in glove relationship, and together we're going to move this industry forward, and ultimately it comes down to solving problems for the customers. And it's, it's all around product innovation, product development, and bringing new products to market faster with better, technology. And that's what we're all together. This market's solving that problem for our corporate customers. And that's a massive market. I mean, if you look at the overall manufacturing market, it's, $1 trillion plus market. So, whether you look at, on-demand manufacturing, you can look at it and say that's a $25 billion market for the US. It's $100 billion, $200 billion. You can look at all the different TAMs related to it. I think everybody knows that it's a large market, and the technology that comes around additive or 3D printing has the ability to solve a lot of these complex manufacturing challenges that these corporate customers are facing every single day.
See. Anyone else? Well, let me ask a question. Now, I feel like I've written some of these questions, but these are actually questions from the audience. So again, I'll read this, and maybe we could kick off with Scott, but I'll be interested in what everybody has to say. So this is what anonymous attendee had to say. Where do you see the large-scale metal 3D printing market taking off in the future? And he means large volume, I think. Do you believe it is limited to, my thing just shut off. I don't know what happened there, but I remember the question. Basically, we're saying, really making a dichotomy between, it was asking two questions, I think. One is, do you see relatively high volume manufacturing using additive taking off in the future? But the interesting bit of the question is then he went on to say, well, what about big parts? And he's talking about DED and things like that, aerospace wings and that kind of thing. So two-part question. Perhaps the industry is going to bifurcate a little and be a volume in one hand and a large part in another. We just finished a DED and large format printing, 3D printing report. It's not out yet. It'll be out next week, I hope. And it does seem a little in working on that it's almost like two industries. I hope that made sense. The question disappeared off my board when I was trying to read it. But maybe I could start with Scott, because he knows what I was aiming at there.
Yeah, I read the question in the queue also beforehand. I thought it was interesting, so I'm glad you asked it and addressed that one. I think part of the question also was, powder-based processes. Do you see those? Because there's some, maybe we're overcoming some limitations there, but there historically have been some limitations on the size of parts that powder-based processes could do. And I think we're starting to, Benny and Velo have a incredible machine coming up that will, largely address, I think, a lot of that. But, just looking industry wide, I think that though there's certainly a market for non-powder based processes that focus on printing large parts, but, they're, I think, just inherently more specialized. There's certain applications in certain industries where, being, deposition of wire-based technologies, wire metal-based technologies, those make a lot of sense. They're sort of almost, kind of halfway outside the original scope of additive manufacturing for, creating complex parts with finite details and things like that. But, they serve a different purpose. So we're, at SmarTech, we're more focused, kind of on the core, which we view as powder-based. Whether it's high volume or not, is kind of dependent on the use and the scenario. But that all of it, I think, leads back to, we have a viewpoint that additive manufacturing will be very important, probably even more important, maybe than it seems as if, it might be heading now, in the future of manufacturing. And the only way we get there, in part is by diversifying a little bit on the technical side. So powder-based technologies today are very important to get us, part of the way there, and then development in other, very different additive-based processes like wire-based, stuff, and maybe even other things that that largely haven't been developed yet or are very underdeveloped now. Will help get us the rest of the way to that vision. So that's kind of how we see things. Whether or not it comes true, it's sort of anybody's guess, I think, at this point. But the powder-based technologies certainly are here to stay, and will serve, the large part of the market, and generate a lot of the revenues, and drive the growth of the industry for, the foreseeable future.
And it's almost like wire-based stuff is part of a different sector. I mean, it's much more like welding, and the post-processing is a whole different story. So there is that dichotomy there. Anybody else got anything to say about that?
Can I?
Yeah, of course.
So from what we see, if you look again 3, 4, 5 years ago, there was a big doubt whether powder bed fusion systems could address large parts. I think this was related to the maturity of the technology 5 years ago. What you see today is, as we introduced the Sapphire XC system, the demand for this technology exploded, and we see a lot of people that their need is for larger parts. If you think about this, the question, there was a mixed question here about larger parts as well as high volume manufacturing. And I think we should not forget that the sweet spot for additive manufacturing is, when it comes to production of parts, metal parts, is for high value parts. And those parts are kind of inherently lower volume. So I think that we are talking about complex parts, consolidated parts. And for those, I think we'll find more and more opportunities that are larger and larger parts. So I don't think that the systems that are coming to market now in terms of size are the last word. In terms of the size will keep growing as the technology will mature, as the reliability and stability will improve. People will have more and more confidence utilizing it for larger and larger parts. So I think this will keep going up.
Anyone else? Oh, sorry.
Yeah, Benny, I would completely agree with you. I think it's, metal processing is, the technologies are still expanding pretty quickly. The ability to make larger parts and more complex parts is moving along marvelously. I look at the work you guys are doing at Velo, wonderful work with advanced machines. I think it's going to continue to grow. And our guess is the printing of metal parts is going to grow faster than even polymers. And there's a lot of really good work to do from an AI standpoint in terms of driving efficiencies and uptime and productivity. And obviously the range of materials being used broadens every day. So I think it's got metals has a great future, both for large parts and increasingly complex parts.
Stephen, I'd be interested in your view. I mean, people come to you and looking for money, I guess.
Yeah, no, so ultimately that's exactly right. So investors always want to see where they're going to get a return on their capital. And so really what that boils down to is, if you're a service provider, can you show growth and profitability, with your customers and repeatability with those customers? In other words, do they come back to you to produce parts, as Ryan would say? They just want a part. They don't really care how it's made, as long as it serves its function and it gets there with the parameters and the time. And on the technology or the equipment side, it's really about applications. Listening to this debate, between powder bed and binder jetting, and really, I use the analogy is they're just simply different tools. They're no different than it's a hammer and a screwdriver. You use them for two different things, but they're both completely needed. And so ultimately, as process engineers, manufacturing engineers, get more comfortable with the tools available in their toolbox for specific applications, and they realize that these tools are available, therefore an application becomes viable. That's ultimately where return from an investor's, where an investor will see return. And we are seeing that across the ecosystem by the work that all of these CEOs are doing. And I hope they agree with that. With that assessment of the situation on the ground.
Stephen, I agree. I absolutely agree with what you said. There are significant ripple effects depending on what technology you use to actually make the initial part, print the initial part, in terms of post-processing, which customers, real customers in production environments want to talk about the whole package, basically. So what do they have to do to finish and inspect a part? Significant differences between, obviously, laser sintering of powders versus binder jetting and other technologies. So increasingly, we're forced to discuss that intelligently and often bring that technology to market as well.
Yeah, I mean, there's been questions that I've seen here. Jeff, you could speak about it, but I think as well as Ryan and Benny, software drives all of this and workflow. And everyone, that's really, I think, for the last 3 to 5 years, where people on the inside of the industry bringing technologies or bringing services to the market, that's where we've all been laser focused. Is how do you, bring your technology, differentiate it, make it more efficient, or your workflows and processes, and that's all driven by proprietary software that each and one of these companies all really kind of have.
Yeah, Stephen, maybe I'll comment on that. And then Benny, I'm sure you'd have an add-on as well, given the progress you guys have made in AI, using AI for enhancing print processing. I think, Stephen, that's the next frontier here, is how do you really take intelligent processing and apply it to additive manufacturing and post-processing to get higher yields, higher throughput, ease of use, all of that using machine learning techniques, and really look at the entire workflow. And unfortunately, that workflow changes by market vertical, so you have to have a more flexible system. We announced this morning the acquisition of Octane, which gives us a manufacturing platform now, or it gives the whole industry a manufacturing platform now that can link together printers with post-processing, finishing operations, machining operations. So to go from design to finished component and apply AI to the whole workflow. So I really think that's the next frontier, is how do we all use software? And from 3D standpoint, we're opening up our traditional suite of software to the entire industry now. I think it's the next frontier, and it's going to be the rate limiting step for customers really incorporating it in the factory.
Thank you. I guess we're beginning to run out of time. We've still got plenty of time. We finish at 10:45, is that right? I believe that's correct. So we certainly have room for another question. I'll hand over to my colleague Vanessa now.
Right. So I was hoping to discuss a bit of private versus public companies, and I thought perhaps Jürgen and then Arno would like to answer that. What do you think about it?
Yeah, so I guess, from a private company perspective versus public, I think one of the things that's nice about private is that you can actually work in complete focus without, let's say, extra attention from the outside. So you can truly look at a longer term perspective, build. On the other hand, your access to capital is also a challenge, right? So I think that's always an interesting phenomenon. I think right now, if you look from a market perspective and a competitive perspective, I would say that there is this access to capital is important, but I'd also be very careful, and I think that's kind of our strategy at Ultimaker as well, is to be laser focused, right? Because I think with capital, you can, become very defocused. And I believe to be successful, we talked about the services piece versus the, building the printers are very two different business models. And I fundamentally think this industry will continue to drive through becoming more successful through focus. And I think, that approach is going to be critical. And I do think that that's one of our opportunities, being private still, is for us to make sure we get our ducks in a row, very focused, and to do it in an organic way, as well as, doing those technology acquisitions where necessary. But that's kind of, my take on it, on being private. And I enjoy being private while you are. There are advantages, but there's equal disadvantages and vice versa.
So does that mean that obviously SPACs is the in word these days? If you have a hamburger stand, you're thinking about when you're going to do your SPAC. Do you think that makes some entrepreneurs a little too quick to, go for the market?
My personal opinion, of course, is just that I think the SPAC as a tool, as a platform, is of course interesting. There's a lot of potential there. All I would always caution to is to say you have to deliver the value, and valuation equals at some point some return. And I think we need to kind of think about that in a very balanced fashion. And I think sometimes you can get carried away. So if you do go for a SPAC or whatever, and the model can work, of course, but you need to be, as a management organization, the management of that system has to be very, very controlled, very specific, and very focused. So, I think that all those tools are out there. Those are all ways to get capital. But I'm also a little cautious. I have experience in that. So I think I always want to try and be, balanced in the approach.
Yeah, makes sense. Let's do a public company today.
Lawrence, can I say something about this?
Yes, of course.
So we are in this transition from private to public ourselves. And in our case, everything that Jürgen said is completely applies. One really critical aspect of this is we have been focused working with customers where the alternative additive manufacturing solutions are not good enough. And we really kind of exclusively focused on these applications where we are enabling for customers a path that otherwise that wouldn't be able to take. And when you think about the implication of that, this means a tremendous risk for a customer. And for them, being able to see in front of them a public company with a transparent balance sheet is enabling in order to be able to take this bet and know what is exactly the risk that they are taking. I don't want to tell you how many customers ask me the question, what's your runway before we are going to make this move? As a public company, it changes the equation. So the access to capital is important, but also seeing in front of you a credible company that you can see its balance sheet, that you can see how it's progressing, and you can assess the risk in a much more transparent way is really critical in order to allow customers to take this bet on the technology.
Maybe adding to this, I fully agree what Benny stated, and also what Jürgen have said. It certainly depends on the level of maturity of a company, because here I'm also with Jürgen. In the beginning, everything is about focus for a young startup team, and if you have to be a CEO who loves to raise funds and focus on nothing else. And that can be a big distraction for a team. So in the very early phases, from my perspective, it really depends on also an experienced team of angel and seed and early growth investors who give the company the patience and the room to develop themselves into a vehicle that can be taken public. And sometimes it's very appealing to take your company public because of the valuations that are out there, but valuation is not only return. Valuation is primarily expectation in a company, and these expectations can kill entrepreneurs or businesses very quickly, more quickly than they have risen actually. And in the very early phases, it's very appealing. It's very attractive to get public as quickly as possible, but it can be a very dangerous path and a very steep path in both directions.
That's a very wise comments. Vanessa,
Lawrence,
I'm sorry. Go ahead. Go ahead.
Lawrence, could I add something? And I totally agree with Benny and Jürgen. Fathom's also in the same transitional period similar to Velo. We're going from a private company to a public company. I think, as you think about, SPACs in general, I think one of the key things is, does the company have a value proposition? Does it solve a problem out in the market? And does it provide value? And ultimately, will it, provide a return for their investments, and can it get to profitability? And I think that's what's, unique about the Fathom platform, is that we have scale today, we have profitability today. And so we know that we have a value proposition that resonates. And so I think as you look at some of these companies, and to the point, SPAC has become a phenomenon, and maybe not with all of the companies are they going to be successful, but it is a means to become public. And if that company is solving a real problem in the market that adds value to their customers, I'm confident that, the SPAC is just a process to actually become public. They'll actually be a very strong public company. And to Benny's point, when we're working with these large corporate customers, they want to know the viability of the company and the benefits and the long-term runway related to it. So I think it's a tool to be able to add further investment and grow much faster, to be able to take on the demand and really the tailwinds that this industry has behind it that we've all talked about here today.
Vanessa, I'm right in thinking we finished at 10:45. Okay.
That's right.
Yeah. Well, we're 10:44. So maybe we'll squeeze in one other question. Would you like to take that, and then we'll finish?
Sure. Based on news that 3D Systems acquired Octon, I was thinking, what does Jeffrey think about strategic acquisitions for 3D printing businesses?
Well, they're going to remain very important, Vanessa. There's challenges on every front in terms of the technologies that make up additive, the hardware, software, materials. There's certainly challenges on every front. And so you can do so much internally, and then you can move faster sometimes through partnerships or complete acquisitions. The art of it is which piece do you reinforce at what time, and also based on availability of assets. The Octon acquisition for us was perfect timing in terms of our customers are really crying out for a manufacturing operating system that can take in additive manufacturing and all the ancillary equipment and processes that go with it on the factory floor. So it was a great time to bring that technology to market on a bigger scale and offer it worldwide. There's going to continue to be those types of moves made, I'm sure, on both the service bureau side and on the technology provider side like us. And it will span materials, somewhat hardware, I'm sure, and also certainly software.
Thank you.
And I'd like to add, I think there's been a recurring theme throughout this session, and the theme has been focus. There's a lot of focus now with these management teams, plus there's now capital available. M&A is a tool. Oftentimes boards make decisions buy versus build. And ultimately, when they have capital to put to work, that's where we see M&A. And so when you put that backdrop, in place, we are in a position where you have motivated and focused management teams with capital to deploy. Therefore, there should be more M&A just because of that setup, going forward in the near term.
And Stephen, one of the themes I think you've heard across the board here is this theme of focus. Trying to understand how to bring solutions to market, not just individual technologies. And that's something I think we're all moving toward very quickly. I think you heard the same thing from Benny. It's pick your market, your vertical, your application set, and really get very, very good at that, bringing the technologies together. So I think that's going to be an increasing theme throughout the industry.
That's right. And it's very different than, 5-10 years ago, where everybody, if we had this panel, it would have been about, we need to build an ecosystem because the infrastructure doesn't exist. And that is the major change. If you had to just kind of take a macro perspective of where we were and where we are now and where we're going.
Right.
Well, we've really run out of time, but I really want to ask you all, like 1 minute each, final thoughts on this panel. Important thoughts that you didn't say during the course of the panel. Let's just go around and then Vanessa and I will say farewell. Benny.
Yeah, I want to iterate again the concept of focus. One of the things that we are seeing is this need to build a very capable supply chain of contract manufacturers, as well as building the demand for this supply chain and building the confidence in the capabilities. One of the things that has been lacking is the ability to do copy exact manufacturing, where an OEM is taking a design and being able to send it to 5 contract manufacturers, getting exactly the same outcomes. And the technology is getting to the point that you can start doing this today without having to have every OEM, every contract manufacturer develop the technology for their own. I think this is going to be really critical for the acceleration of adoption in the market.
Jürgen.
I guess from my side, being relatively new to the industry, I'm kind of very comforted by the fact that I think we all seem to have very clear, similar views on what it will take, and the fact that the growth of this industry, that we have still an untapped market out there. There's so much more to get. And I think this application specificity, the focus, are trends that I think are going to be important. I think equally important is that as an industry, we really have to be sure about that. And I like what Ryan said, basically, that fact about what is the customer's requirement? What is he looking for? What's that outcome? That focus, I think, is going to be a huge change. And I think that's where we'll get the inflection as well, ultimately.
Arno.
Yeah, just chiming in what's been said. I mean, the industry has tenfolded in size since I joined it 13 years ago, and it's still such a small industry and such a small family. It's the same kind of faces that we see at every single show, which is really, really nice. And I think the most important thing is that it's going to be so much bigger in the future. So there's space for every one of us, and it's about cooperating and building this ecosystem and working together on making these bloody applications happening, and printing electric motors and printing heat exchangers and printing the high volume parts. So I feel really honored to being part of this industry. It's so much fun, and I can't wait what's ahead of us.
Expecting to see anything new next week in Chicago?
Well, unfortunately from Europe, it's difficult to travel to Chicago, but I have my spies out there. Yeah. So there will be a lot of new things. I'm convinced, and not only in Chicago. The next coming, let's say, 3 to 4 quarters will be full of exciting news.
Yeah.
Yes.
Very
exciting.
I mean, I'm excited to see how. I mean, I will be in Chicago because that's easy to do from Virginia. But it will be interesting to see how the whole thing shapes up. Stephen.
Look, I think it's just very positive. It's been, a progression over the last decade, all moving in the right direction. And we're seeing real customer adoption, which means that these businesses are, generating returns, which means there is, investor interest and focus. And clearly, the folks that are on the phone or on the panel here today have demonstrated that they're, laser focused on, serving their customers, which means that, this is going to continue to be an investable sector, which means, from my perspective, there'll continue to be a lot of activity in the investment banking side. So,
thank you, Jeffrey.
I think most of it was said, Lawrence. I would just echo, it's an exciting time in the industry as additive moves into a production environment in a serious way for both polymers and metals. I think I would echo what Benny said. I think, companies that'll be successful here will be the ones that are serious, sustainable businesses with good, robust supply chains that can provide assurance to customers that you're going to be around and not let them down in the future. It's a great time to be in the industry, and I think you'll see a lot of evolution in the next 12 to 24 months.
Ryan.
Yeah, first of all, thank you for having us be a part of this panel. I think it's been a great discussion. My thoughts are agility, responsiveness, speed, problem solving have never been more important than they are today for the customers out there. We've built the Fathom platform to be able to solve those complex manufacturing challenges. As an industry, we're set up uniquely to be able to solve and provide those types of solutions. And so I think there's, a clear runway for growth for everybody as part of this industry, because we can provide the agility, the speed, and the responsiveness to solve those complex manufacturing challenges that these customers have today in a way that no other industry can. And so I'm really excited about the future momentum that we have.
I hope I haven't left anyone out except for Scott, and I deliberately chose him to, since he's my colleague, to be last. So Scott, your closing comments.
Well, I don't have anything prophetic to say. I think that we'll see the first pure play billion-dollar additive manufacturing company probably within the next 3 to 5 years. And I think that if you were to ask me who that would be, my top 2 choices are on this panel already. But I'll let you guys wonder about which one might be number 1 versus number 2. So that's all I have.
Thank you. And any thoughts about next week in Chicago? How many people will be there? You're a forecaster.
It's anybody's guess. I'm excited to go. I've always loved the Rapid Trade Show and all the industry trade shows. So I'm very glad to go back and see the technologies in person, because working as a market analyst, that's not something that it's a very important piece of our job and not something we've been able to do. So yeah, I'm very excited to go and honestly wondering what we'll see there, to be honest with you.
Thank you. Vanessa, any closing thoughts? We're already late, so what?
Great panel. Thank you, everybody.
Yeah, thanks everybody. It was magnificent. It's, I mean, everyone on this panel is a serious influencer. I think that's the popular term in this industry. And it's been good being here, being influenced and hearing your thoughts. And with that, I'll close. Please be back, I guess I think in a little under an hour now, to hear a very similar panel from a structured point of view, but with different moderators and different panelists. And I know I'll be there. And thanks again.